Hello traders, good morning, good evening, good afternoon, happy Monday, good week. How are you today? Please give me some okay that you can hear me well and that you can see my screen. All right, perfecto. Wonderful. Joseph, it's only me talking. It's one-man show. If someone wants to talk, guys, I just want to remind you that you can just say that here in the chat, and I'll give you the microphone because we are 100% interactive. It's live, okay? Like a radio show. Consider me like a radio show. Keep you muted. Okay, I will. You are muted, Dixon. All right, guys. So I hope you had a good weekend and you refreshed a bit, and you are ready for another exciting week with some great opportunities. The way it looks, at least at the beginning of the week. We have a speech from Draghi in about 35 minutes, if I remember correct, today. So it's going to be very interesting how it's going to affect the euro, the euro pairs, the DAX. Big chance it will. So I can see some new names here with us today. Welcome to our family, the Traders Academy Club family, guys. And we are here for you for any question. Just quick reminder the way you should catch up with what's going on, and so you can understand basically what we are doing, how we are doing, and why we are doing it this way is to go to the members area, watch the video tour that explains how to use the members area, and after that there are the trading reports which you can see in the market sessions, and you will get such report after every single live trading room. Okay, it takes some time to create it, so once it's completed, you get it together with the live room recording. Of course, it's available for you. Every single session is followed up by the report. The idea of the report is simple: summarize in a simple way, in a written way, right here for you, so you can always come back and check and get yourself the reminder of what was discussed in the live trading group. There is a video right here for you how to use the report. The idea is very simple. Here we are summarizing up the direction with quick explanation of what was discussed. If there are extra screenshots, that you just click here and it opens the screenshot for you. And here, if you scroll lower, there's a table. The table is basically our cycles. What we choose to trade, why, and how. Okay, so like for example, we're clicking here the OZN. This is basically the explanation. What do we do and how do we do that? Okay, Andrew, no, this is not this is not sortable. Okay? You can't filter or sort or whatever it is. Basically, the date is the time that the cycle was drawn originally. Okay, it just represents our cycle. So for example, you see this cycle when this cycle was added and created in our admin. Okay, so basically that's all. That's where it's created. Okay, so this is everything for you available, guys, and the reports you get it after the sessions, as I said. So once again, welcome on board. Just want to be very clear here. You would the new guys joined, right? You would hear us discussing about direction. So for example, you would hear us today, yeah, saying that euro pound we are for sale. It does not mean we are selling right away with whatever the reason is. No, that means we are after sell setups. Sell setups you find with the strategies you use. It could be any of your strategies, any of my strategies, any of someone else's strategies. I don't really care. how do you trade as long as it works for you. The entire idea of the live trading room here is to show you how we define our directions, invalidation levels, the cycles basically, how do we follow the bigger money flow, and why. That's all. Then that's the entire idea here. And what strategy you apply after that, it's really in your hands to decide whatever makes you more comfortable, more profitable, more efficient. All right, remember that. So it's not like I know it's very tempting, right? So we are bearish, boom, let's go and sell. No, that's not the idea, because you need to apply your strategies inside the live trading room. We set the directions, we set the instructions, explain the setups, and mainly working on timing, because timing is so crucial when it comes to trading. Let's face the truth. Most of the traders are rushing into trades too many times, and when it's a good time, to enter the trade, most of the traders already give up, right? And then the moves happens. Andrew, the strategies I use you can find in the members area. Okay, my strategies, you'll see the strategies in courses side. That's the strategies me, and not just me, of course, my entire team use for the short-term trading. For the long-term trading, I'm using pure cycles, mainly investments, regardless the strategies. Okay, so basically you would figure that out there with the live room. Very, very simple. Okay. Guido, these ones, yeah, you can adjust it. These lines you can go and adjust. Just click on that, go to the action zones, and play with your colors here. It's really up to you. Okay. All right, guys. So let's begin. And this is Monday. So Monday is our longest session. The reason I had to start it earlier today, and I'm sorry if it's not comfortable for some of you, but I have to run away right after that for a very important meeting in Toronto downtown, so I had to do it earlier today. Apologize again if it's not really good time for some. Let's start. We go over the report. Okay, we are following up our setups, our cycles. So as I said, Monday is the longest session for us. The rest of the week is basically follow up. So we are building a plan for the entire week and we are following it up. Makes sense, right? So let's start with the euro pairs. Euro dollar is in our first list. Where this Fibonacci came from and why it's here, we don't need it. Let's remove it. Fibo delete. Great. So what do we have for the euro dollar? Basically, we are looking at the cycle. The 125, 126 zone is holding, is in play. We would expect that to push that lower. Bottom line, right? That's according to the weekly cycles. But here comes the little but. According to the monthly cycle, we also have a trend line, we have all the confirmation, right? But if we go and we put the monthly cycle, the way it develops, we should remember that the 100 level is higher, and that could be the 132. So for the long run, yes, the euro dollar has deeper levels, higher levels to reach. But that's for the long term, right? The weekly we saw, the daily represents for us a beautiful cycle by itself, triple ascending cycle. We had a false break. So basically, there are enough reasons to look for the bearish retraces on the short term. That's all. We don't have anything conservative here in terms of lower lows yet, false breaks and lower lows. We don't have it. So the bearish approach is only for the short term, and yet it's also for a bit more aggressive trading. Because for conservative trading, Let's think about it. We do want the rallies to finish with a divergence, which it did. We do want to see false breaks because that represents the losing momentum of the bulls. And we do want to see lower lows. Why? Because that's how bearish momentum is gained. The bottom line, right? But we don't have it. So for conservative approach, we still have no enough reasons to trade the euro dollar. We can deal with that on the short term. Remember the speech from Draghi today? And let's discuss what do we have with the euro dollar. Since we mentioned on the previous week we had a false break, that on the bottom of this zone, we can start looking for possible buys. Right? That was our short-term idea. Why? Simply due to the fact that this could turn to be just a range movement, right? Before it decides anything further on. On the 1 hour chart, inside this range, we got kind of a descending triple cycle, which was right here. Descending triple cycle is right on this place, which means every leg is shorter than the previous leg. That's the idea of the descending. By the way, the new names here, guys, the new members here. Inside the report, in the comment section, these are the most important webinars for you in terms of the cycles. On your free time, good time, no pressure, do it your own pace. But if you do want to understand completely what we are doing and how, please go all over them, watch them, especially the cycles ideas, so you understand how we choose and what do we do in terms of the cycles. Okay, so we do expect the short-term retraces. Now that was a triple cycle down. We would expect double cycle up, which we currently have, right? Or a range. That's all. And as per the trend line that should be broken is this trend line. So if the euro dollar does manage to break this trend line and hold this stop, we can start looking for sell setups again. So breakout, retraces, and we will be looking for the sells. Okay, that's the entire idea. We wanted to see the triple double. We got it. 1, 2, 3. 1, 2. So here we go. We need to go below that, get the retraces, and sell. Okay, the retraces could be sold, of course, on one lower time frames. So that's the entire idea for the euro dollar for the short term. And we are after short term sells basically as long as we are below this top. That was the false break top created. Okay, targets for such bearish journeys, and again I repeat, short term, because for long term we basically have nothing. I would want to see this level being cleared. Why? Because if it is about to create for us the longer term setup, we definitely want to see that start creating lower lows. Therefore, it would be very good if we can see that start to creating these lower lows, because then it will be a bit safer to do that for longer term riding. Okay, that's the bottom line with the euro dollar. Now, the only thing we need to pay attention to currently on the euro dollar, that's where the setup is very tricky, is right here. We are stuck in two candles range. Candle number 1, candle number 2. That's two candles range. That's where the current trading on the euro dollar, you see that? It's very tricky. Basically, the reason it looks like that is very simple. We have a speech from Draghi. Why would the big money do any risks right now, right? That's why it is the way it is. So when you see something like that on the chart, you can know that the market is waiting for something, right? For clarifications. Okay, so we do need to get out of the range. We do need to gain the momentum and get ourselves a good setup. I would not be surprised at all if the euro dollar will try to do anything like that. Clear these levels, and from this moment start the bearish journey. Would not be surprised at all. That's why I said we have this trend line and the lower lows to represent us the real momentum if it comes right with the speech. The next pair on the list is the euro. Any questions, by the way, about the euro dollar? If there are any questions while I'm talking, guys, just write it down and I will reply right after I finish the explanation there, okay? I just saw your Ripple trade. Well done. Well done. I'm very happy. Actually, I'm with you in the Ripple, but we will discuss about it later on. They are good. They are good. All of them, they are moving. Okay? Great. All right. Euro versus the pound. We are bearish there. Remember the beginning of the session I told you guys I'll say that? I will. So we are bearish there. Why? Because we have had on a weekly chart a triple cycle. We have had a bearish false break. We have a bearish divergence. Simply beautiful, isn't it? So that's the bottom line for us. Now on a daily chart, we had a first move down right here, and we are now dancing in the range. On the 4-hour chart, we had a triple cycle down, which it looks like that. We have a bullish divergence, and we have the trend line bounce. So on the short term, we can expect and respect pullbacks. These pullbacks would be reasonable inside the Fibonacci retraces of the triple cycle. So that's our zone. Where from, according to the weekly and the daily directions, we will be looking for sells. Now, this is our invalidation. As long as we are below this level, our idea to look for setups for a sell direction makes sense. If we go above it, that could be a warning sign. Maybe the correction would be a bit deeper than originally expected. Okay, so this is the invalidation zone. It's very, very important to remember the invalidation zone. Okay, so that's for the euro dollar. We are looking for the euro pound. Sorry, we are looking for two waves or a range. Or what could happen here also is just a push in one wave and then a bearish hidden divergence to be created. Why? Because sometimes we have one strong push instead of two waves. Depends on the money flow and basically the fundamental events that happen. But when you have the weekly and the daily directions with you, so you have ongoing trend, not developing trend, you have ongoing trend. That's where the hidden divergence comes into very important play. Because hidden divergence basically means trend continuation. Okay, that's basically it. So for the euro pound, we will accept retraces on the short term. We want to see two waves up or a range on the 4-hour chart, or 1-hour chart would be acceptable because the 4-hour chart triple cycle allows us to trade the same time frame on a lower time frame, two waves, and then and only then we will be looking again for the sells. Those of you who were dealing with the sells on the previous week, and we had plenty of them on the previous 2 weeks actually. It started right from here, continued here, then we had one more, and that's exactly the time to take your profits, when you have the triple cycle and the divergence against you on the higher time frames. So that was a beautiful first ride for us. Now this is time for the corrections. Let's see how well they build for us. I remind you the speech that will start in about 20 minutes or so, and that could be effective, of course. So eyes on it. Any questions about the euro pound, guys? Muhammad, during this year, that's what I said. I said at the beginning that what will happen as well. We are on tests. It takes time. Once it's ready, it's released. Okay, any questions here, guys? Vincent, I'm not sure I understand what you said. Why can't we look for what? B-track? What's B-track? Oh, breakout. Why can't you? Of course you can. When you have the triple cycle ending with a bullish divergence, you go to lower time frames and you compare, you put a cycle right on it. And the last cycle you had on the 1 hour chart is right this one with the bullish divergence. So of course you can. And that's where you start to put your strategies inside. You can drop even to lower time frames and draw the last trend line available for breakout. Of course you can. But this is exactly where I said before. You apply your strategies in the directions. How you do that? It's you with your strategies. Okay, I can't manage your money. So basically, you have to apply that with the ways you work. Very simple. Okay, but in terms of cycles, guys, this is the classical conditions. When you have one time frame cycle, you go to one lower time frame, you apply at the ending part another cycle. Each of them has to be with bullish divergence, of course. And then when you have them, you can go to the lower time frames and start looking for the last breakouts, because that's where you get yourself the edge, right, for the corrections. Exactly like that. Exactly like that. Okay. All right. So euro pound is covered. Euro yen. Let's discuss about this one, guys. The euro yen weekly. We had a double cycle. We have the bearish divergence, which means we are after sells. The confirmations we got were from the daily chart. The daily chart had a triple cycle for us, which was pretty amazing. And we had a false breaks and convergence. In trading world, there is one great term we are using for such cases, and that's yummy. Yummy it is, because that's technically the best thing we can ask for. The only thing now is the setups we're looking for the sells. On a 4-hour chart, we're dealing here with a cycle against us. That's a triple cycle. We have a bullish divergence here. In other simple words, retraces up are very welcome. How the retraces could go, guys? 2 waves up, range, boom, right? And then we are selling the top of the range, right? Or, and here comes the or, because we are on ongoing trend. Ongoing trend. This is the weekly bearish and the daily confirmed. This is ongoing trend, so we can ride the trend with the divergences. What kind of divergence we have to ride the trend? Bearish hidden, like this. Bearish hidden. We are with the trend. So if we create here another bearish hidden, we can go and trade it. Remember that when you are on, I was, the reason I raised it up because I was asked about it during the weekend. The bearish hidden divergence comes into play in a running trend. A running trend is when you have your time frames synchronized. Makes sense, right? When you have your time frames synchronized, like in our case, weekly and daily, you have yourself the edge of riding the trend. That's all. So we want to see these retraces, 2 waves, range, or a bearish hidden divergence, and we are after sells. Bottom line, if you want to trade the retraces, these little pullbacks, remember that you are trading against the weekly and against the daily, right? Which means it's aggressive. Just remember that if you trade aggressive, then your risk has to be what? Much shorter, much smaller. Okay, remember that. It's very, very, very important. The 1 hour chart provided us this triple cycle. So the 4-hour is ending together with the 1-hour chart, and that's where you get yourself the trend line breakout, and that's where the basically the pullbacks are in play. That's the place where the pullbacks are, well, start to be relevant, right? We had a bearish divergence here, and it turned to be kind of a fake convergence, even though we don't have a positive situation here. Bigger view, the divergence also on the 1-hour chart in play. So again, it gives us all the reasons to expect the retrace, and we will want to sell the retrace. That's what we might have, or one leg with a bearish hidden divergence, as I said, or at top of the range. Whatever happens, we will be after sells. That's the idea for the longer run. Okay, that's for the euro yen. The next one on the pair is the euro versus the Canadian. Now here is where it comes very interesting. The euro cat had a double cycle for us inside a bigger range. So we have this, right? We can mark it horizontal, or we can mark it as a triangle. It doesn't really matter much. It also could turn to be kind of very big, but head and shoulders. Inside all that, we have the double cycle that is playing inside here, 1, 2, and we have the divergence, of course. And we go to the daily chart, looking for the confirmation there. The daily chart has a double cycle by itself. And more than that, the 4-hour chart has a cycle by itself. 1, 2, 3. And on the last part, of course, as well. Here, from the last leg, 1, 2, 3. Now, weekly chart created a beautiful inverted hammer right on the top. Daily chart created a beautiful engulfings. So as long as these stops hold and are in play, the idea here is for sales. That's all. The question is now, how do we go with it? Now on the 4-hour chart, we had a false break, we had a bearish convergence, which means very simple, 2 waves up, or a range, or a bearish hidden divergence, because on the ongoing trend, we are after sales. Do we have the 2 waves retrace on the 4-hour chart? No, we don't. Do we have the 2 waves retrace on the 1-hour chart? No, we don't. You see, guys, the importance of waiting? Do you see that? The importance of waiting for the setup. That's what I call timing. And why is that so important? Because let me ask you this question. How many times in the past you would already sell Fibonacci retrace level? Just be honest with yourself. How many times you can hit a pending order and just attack the level or whatever it is, or you can come and say, but now it's making a trend line, etc., etc., etc. Many times, right? Right? Here you go. The importance of, wow, you guys surprised me. So many. 7, 8, 9, 10. Wow. Okay. So, well, why not to sell the Fibonacci retrace? That's a good question. Why not to sell the Fibonacci retrace? Selling pure level is one of the most classical and known trading approaches, right? That's the easiest part. You got the confirmation, sell the limit. But I have nothing against it, and I do that by myself many times. The way I do that is once I got myself all the confirmation. In that case, that's not wrong. That's correct. You can sell yourself the 50% and go with it. But this is the more aggressive approach, because you just attack a level. You are not confirming it, right? Just think about it like you are in the car and you have a green light. You are the first car in the row. Do you press the gas pedal, immediately? Or are you looking left, right to make sure there is Nothing around you. No surprising bicycle jumping right there, and someone decided to cross the road on the right, on the middle, or someone doesn't stop on the red light from the other side, or you just press the gas. Think about it this way, right? You want to be safer. You are looking for a minute left and right. That's basically the same idea. Same idea. Now, when you have the confirmation, weekly, daily, and 4-hour convergence in play, everything, that's exactly where setting the limit is a correct thing to do. But, as I said, that's a bit more aggressive. It's a bit more aggressive. Nothing wrong with that, because if it works, you catch yourself a possible edge, right? Because in 2 waves, we do want to see the retraces and the breakout, and we basically ruin ourselves the risk reward. Agree? Here, if we attack, boom, we can catch the edge, and then we are the king of the world, right? The ego flying to the sky, the self-confidence is skyrocketing. We feel like nothing can harm us. But always ask yourself the question, what is your trading style? If your trading style is a bit more aggressive, no problem. No problem. Every trader is a bit different. No problem. If you are a bit more conservative, for conservative, the best timing is to wait for the 2 waves pull back and get in with the breakout. By doing that, yes, you may be ruining yourself a few pips, but you might go and improve yourself the risk reward pretty much dramatically. Because by attacking here, you have to protect the full original top. By attacking here, you protect yourself the latest risk, the latest portion. Okay? That's the idea here. That's the idea of 2 waves. And remember one more thing, guys, that I always show you and tell you when it's on. When you have a vertical move means basically almost a straight move, boom. Not a trend developed, not an angle like this. Boom, almost vertical. When you have something like that, the retraces many times tend to be uglier. They tend to do something like that. Take longer and uglier. Many times. So when you see things like that, it's just, 1 + 1 normally equals 2. So here as well. So yes, the direction is sell as long as this top holds. Yes, for the conservative entry, we have a great level. Definitely, we also have this trend line retesting right now. Maybe the bearish hidden divergence will be in play in here soon. So we do have all the reasons there. But for conservative, we don't. And for conservative, the best way to do that is always the 2 waves breakouts. Okay? That's the idea. Now let me ask the questions. Warren, okay, you asked about the EuroCAD before, so that's basically the full view here. Okay, now we go over all the cells, cells. Yeah, exactly, Roberto. This is exactly what it is. Aggressive, a bit more aggressive approach. Now, as I said, I have no problems with that, and I myself do that. Okay, mainly when I cannot watch the setups. If I'm not around, I'm not able to watch for the setup, I just put the level, and that's all. I know if it's triggered, I'm inside. If I am around and I can improve my entry, that's what I prefer to do. Okay, but when it is correct to use pending orders, when you have the confirmations, like in that case, that's a convergence that was confirming the false breaks. And basically, game over. As long as this top holds, we are after ourselves. If this top is broken, we will have to stop for a second and ask ourselves, where could that go? Because according to the weekly cycles development, theoretically, there is all the reason to sit it around 160, maybe even slightly higher. So we're not going to force it, and you know, no, sometimes I say don't marry your position. Okay, don't marry your positions, right? That's the idea. Because one of the most common mistakes is, oh wow, it's so amazing, I'm going to attack it without a stop loss. Why? Just because it looks good? No, right? So remember that, especially when you have the levels higher that could be in play. So yes, technically it looks amazing. We couldn't ask for more. Is that a guarantee that the market will agree to drop from here? It's only a possibility. There is no guarantee when it comes to market. Remember that. And that's where our responsibility comes in play. We have to approve ourselves the setups. Okay? Vincent, yes, basically they are in the webinars, and also here in the live room. That's what we are doing always, all the time. Okay, so you do it live. All right, guys. So that's for the Euro CAD. Wanted to go clearly here. We are bearish. This is our invalidation zone. We are looking for the sells. The safest way is after 2 waves retrace, or at least with a bearish hidden divergence for a confirmation. Okay, on the lower time frame. Euro OZ unchanged, bearish as long as this top holds. This is our invalidation. Here you go. Why? Let's quickly explain what do we have here. It's a bit simpler in this situation. Double cycle on the weekly chart, bearish divergence on the weekly chart. Daily chart is a triple. 1, 2, 3. False break came on the daily chart as well. Bearish divergence between the moving averages is in play. And a 4-hour chart is a triple cycle by itself. 1, 2, 3. So we have the level, we have the reason, we have the false breaks. And now on the 4-hour chart, we are inside a range. How do we define that? One false break on the opposite sign, and another false break, right? We have all the reasons for the range to be called here. So basically, for us, as long as we are below the tops and inside this range, sell the rallies is the right thing to do. That was the follow-up for us from previous week. Very simple. And here we are. That was our last trend line breakout available. And it happened right before weekend on the previous week. We got a beautiful breakout here. 3 new. I was sure you're sharing here some kind of password, but okay, as long as you are cleaning it, it's okay. It's good. All right, so this is the last breakout. This is the last payout that we've had in the bottom of the range. We have the bullish hidden divergence here against on the 1-hour chart. I want to remind you that inside the range, which is the 4-hour chart, divergences are not in play because divergence is coming at the end of a trend. Range is not a trend, so it cannot be recognized on the 4-hour chart. So the divergence could be only on the lower time frames, which have like inner cycles, right? For us, we are a sell as long as we are below this top. Targets, 50% of the triple cycle on the 4-hour chart, which means 155. And then we can start dreaming about the deeper views. That's 150 and 147, according to the daily cycle. Will that hold or not? Only time will tell. We have the speech from Draghi now. So let's see how it affects. Basically, the direction for us is sell as long as we are below the top of the ranges. Okay, so we don't have a close above it. That's all. Questions? Okay, great. Euro versus the Kiwi. Now here, I want Again, quick explain what do we have for long term and short term. For the long term, we have triple descending cycle, which means we are after buys heavily. That's monthly chart, so that's going to take some time. According to the weekly cycle, we had this double cycle, right here. And on the daily cycle, we had ourselves ending special. On the last part, we were riding on this view. The second leg from the weekly is a special cycle by itself on a daily. We had two false breaks down. Oops, sorry, what did I do? You see my screen yet, guys? Yeah, I pressed some wrong buttons here. So. We had false breaks 1, false break 2. We had a convergence. We had 3 waves down on the 4-hour chart, which you can see right here. Oops, here. Right? And that's all. We had a triple cycle up, yes, but it's by definition also a double, of course, in play. So for the longer run, we are bearish, which means we are looking to get the correction to this daily cycle, 50%, or the 38.2 from the weekly, which is basically right here. So 163, 164 is our target for the sells. That's for the long term. For the short term, because of the fact that we had this potential triple followed down by a double cycle, the short term trading could provide us the pullbacks that we will be looking for sell. Yes, according to the daily view, right? But the way the short term behaves, we can look for the pullbacks. For long term, once again, we are after sell rallies. That's the main plan from the daily and the weekly chart combinations. For those of you who do want to trade the short terms, well, you understand it's riskier, right? Due to the daily and the weekly. If we get this completed, by the way, guys, prepare yourself for heavy buys because that could be some kind of a monster. From this level or this level, we can see some flies if we manage to reach them, of course. If we manage to reach them, that could be really good ones for the long term. The last euro on the play is the euro versus the franc, and the euro versus the franc provides us, as for now, the same setup we wanted from previous week. Nothing changed. For the long term, we want this. For the short term, we are in special cycle ending on the 4-hour chart. So we do want to see this, which we will be able to go and sell later on. So short-term rallies are acceptable. Long-term, sell the rallies. We are looking to join the daily cycle, so 2 waves correction or a range correction, which could be something like that easily, when we will be looking to go for sells. Nothing changed for us. It's all remained the same. Euro franc long-term sells. Short-term, we accept the rallies. We want to see the rallies so we can go and sell them. And that's all. That's all our euro pairs that we are trading and having on the list. Any questions about any of them, guys? Perfecto, Raul. Thank you very much. Have a good one. All right, continue then to the next ones. That's the pounds. Okay, pound pairs. Here we go. Pound dollar, triple cycle from the weekly. Right? Fake convergence condition here. We got a bearish divergence turned to be a fake convergence with new high. So enough reasons to start looking for sells according to the weekly chart. Daily was an extreme by itself with the RSI, but a divergence on the bigger view here. And this was on the last leg, 161.8 in play. Basically, 1 plus 1 normally brings us enough reasons for the sells. We got the triple cycle down on the 4-hour chart, double cycle up on the 4-hour chart. It was blocked with 61.8 Fibonacci retrace. We got ourselves a bearish hidden divergence. And we have the trend line that is holding the bulls yet. So pound dollar was and remains bearish for us. The main invalidation level, of course, for the longer run is this. Okay. And the targets get it right here. We put the cycles as they develop, assuming that this is the current top. We have a magnet zone right here. So 138 could be definitely a great first target. 136 zone could be a great final target. So for pound dollar, we were bearish. We are still bearish, looking for the sells. And we basically are bearish as long as this top is in play and holding. Okay, that's for the pound dollar. The next one on the play is the pound versus the franc. Now, from the bigger view, well, huge view, monthly, we want to see dips so we can go and attack them. According to this one, there's a great chance we are going for a very, very, very long-term buys. But that's a monthly. Weekly, we had the last leg in play here. That was a cycle by itself. And the levels are reached, targets are reached. Now, we had ourselves double cycle. So we want to see the 38.2 correction, or at least 2 waves down correction, reaching it. That's 128 could be very beautifully in play, according to the weekly. So we want to see at least 2 waves down on the daily chart, followed by bullish divergence. Do we have any? No. That's the thing. We are currently in one dropping leg with no divergence, right? So we have the false breaks, we have the convergence. Technically, we can still look for the sells to get this second leg. By ideal, back to the trend line, the 128 zone, where from we will attack heavily to the upside. Okay, so basically for pound franc, we are looking for the sells, sell rallies. We remain bearish there. We got ourselves the triple cycle down. We get ourselves a double cycle up. We can start looking for the buys, for the sells, sorry. Now, how can we know if it's aggressive or conservative? Basically, take a look. It's very simple. We're still inside 2 candles range. You see that, guys? Look. 1, 2. That's the last 2 candles defining lower highs, lower lows. So we're still inside them. Can that be conservative trading? Of course not. Which means the conditions are currently a bit more aggressive. And that means what? The risk should be much lower. It's very important to understand that, because many times, as I said before at the beginning, we are looking at something and it looks so good that we are convincing ourselves that it can be only better. And we allow ourselves to go and have a full risk and then regret. In order to avoid that, we need to understand in what conditions we are trading. Do we have the conservative setups? And the conservative setups are basically the easiest. When you have nothing to say no, then you're in the conservative mode. And when you have these obstacles on the way, you can't be on the conservative. That's where it becomes a bit more trickier, riskier trading. and that's where the risk should be lower, right? And don't worry about the risk to be lower, because if you respect the risk reward, it would still give you the bigger reward, right? So don't worry about lower risk, lower reward. It's safer, and in these conditions, it is safer. So for pound franc, we are bearish. Can you say that we have the best conditions to trade currently? As I just showed, we are stuck inside 2 candles range, which means it's more aggressive. And to prove myself here, basically always ask yourself on the movements. Look at these movements. Despite few candles, look on the other candles. You see big spikes, a lot of spikes, shadows. That means what? That the big money is not in play. When the big money is in play, you got yourself clear moves with beautiful bodies, candles on the road. When it starts to be with tiny bodies and very big spikes, and a lot of them, you basically get yourself understanding that the big money is not there. Algorithms money is in there, in play. Okay? Very important. And that's where it's the importance of understanding on what conditions you are and what kind of trading do you have, a bit more aggressive or more conservative. Okay, guys? Very important. This read saves you money. And in trading, remember what I always say. Trading is not about making more. Trading is about losing less. That's how you improve your performance. You can't make more money than the market can pay. Remember that. It's a very fake belief that if you trade more, you can make more because you are able to catch everything. Fake, impossible, doesn't exist. Even not in trading dreams, doesn't exist. So you can take specific portion what the market is able to pay. What the market is not able to pay by not moving, you can't make. So trading, profitable trading, is mainly lose less, not profit more. If you lose less, you automatically profit more. That's the reality, guys. And I want you to remember that these little things are so important to remind ourselves always, over and over again. So pound franc, we are bearish. We are looking for the sells. As I said before, the current conditions make it still aggressive. Pound yen, we are also after sells. The reason here is very similar to the euro yen. We had a double cycle on the weekly chart followed by bearish divergence. It was yummy. Remember the yummy conditions? That's yummy conditions. Daily chart, we had a cycle by itself, triple cycle to the upside on the finish run, and the 4-hour chart had this cycle for us by itself. Too many reasons to go for sell, while the final one came here in terms of a false breaks and convergence. Weekly and daily are ongoing trends. We are looking for the sells. We need 2 waves up on the 4-hour chart, boom, or we need a range. So whatever we have here, we are for the sells. Every rally, every range, every bearish hidden divergence like this one is a sell. Every 2 waves, every range, or every bearish hidden divergence. Once again, where the hidden divergence comes in play, in ongoing trend. When you have yourself ongoing trends, you have yourself the possibility to trade the hidden divergence on the best probabilities. And a little secret, the hidden divergence becomes a monster on ongoing trends. Okay, it's very important. All right, guys. So why do I say that, by the way? Because this is a bullish hidden divergence. Would you go and trade it? This is exactly the example I'm talking about. This is a bullish hidden divergence. Would you go and trade it? No. Why? because we are in a bearish ongoing trend, right? So the main pressure, the main money is still going for what? For sales, according to weekly and daily. So yes, maybe these ones can pay short term, right? But do you really want to risk yourself there, right? That's where it comes again, conservative and aggressive. It's all about that, guys. It's all about that. Okay, remember that. And ask yourself the same questions I ask you. Always. Every time frame you go through, ask yourself the same question. What is my cycle? What is my higher cycle? Do I have signs with me? Do I have signs against me? On each of the time frames. The entire picture you get is the entire answer you get for your trading decision. And I'll tell you more than that. Most of the setups that you will find, you should say yourself, don't trade them. Most of the setups, listen carefully, guys. Remember what I said before? Trading, profitable trading, is mainly lose less, not earn more. Most of the setups that you and the immediate thing, consider yourself to trade, most of them you should be able to say no. Because the eye, that's the psychological trick here, the eye catches everything that our brain tells him, like, interesting. For us, it could be every divergence, every moving average cross, every trendline breakout, every Fibonacci retrace, every support resistance bounce, everything. We catch what our brain is trained for. We catch all these setups that our brain is trained to catch. Okay, so don't let your eyes fool you. Ask yourself the questions I just asked you, and remember, most of the setups that the eye finds should be no. If we have 1 or 2 out of 10, for example, it's amazing. Then you are able to filter and let the statistics play in your favor. It takes time, it's hard to do, but this is real trading. And I've been asked some, I don't remember exactly when, but about my previous hedge fund trading. I said, why did I leave such an amazing job, guys? At the part I was doing, my job was hunting. I was sitting just to hunt, looking on numbers running in front of my eyes. I could not blink. Not talking about going to get a coffee or going for a toilet. I'm talking about blinking. You can't. You're so many numbers running in front of your eyes. At the moment that's boom, that's the machine, the algorithms catch a deviation in numbers, boom, that's where you have to hit the button right away. Which means we are filtering like millions of numbers in front of the eyes and catching them just to be able to confirm the good one. The big guys that are trading stocks are reading the company's situations, trying to understand the macros, the big fundamental things, right? Trying to understand what's the logic behind the company, how the future looks like, etc., etc., etc. If you believe in the people working there, and so on, right? And 1 out of tens or hundreds is chosen to be the right investment. For most of the traders, the retail traders, the same world we both, me and you, belong to, the sad reality is the common belief that whatever your eye catches is a good setup. Oh, that's a support. Oh, that's a resistance. Oh, that's a trend line, etc., etc., etc. Let's attack it. You understand that this cannot work, right? Everyone in the subconscious understand that this is not trading. This is chart gaming, charts playing. And I always say that charting is the easiest part of trading. This is exactly the reason why the traders run to charts. Because it's easier. Because it's the easiest. That's the easiest solution. And we choose blindly to stick to what sounds easy for us. Right, guys? Agree with me? That's very, very important to understand these things, because the professional trading, it's not about charts only. It's about psychology. It's about the decisions you do when your brain and your eyes telling you act. Right? Put yourself in any real life situation, like a conflict with someone, like a argument with someone, like in every other conditions. Boom, this immediate reaction you have in specific conditions. How do you react? How do you react in reality? Right? You many times breathe, count to 10 before you do any stupid thing, right? Not every single reaction that you naturally, your brain tells you react like that, go aggressive, go crazy, go whatever it is, not every single reaction should be like that. Most of the reactions should be different. So you brace for a second, you consider your 1, 2, 3 possibilities, probabilities, you consider the advantages, disadvantages, right? And then you react, then you make your decision. Same with trading. So that's why I'm showing you that, guys, because sorry I went into that part, but this part is so important. And when the market gives me the setups to discuss about, that's exactly what I want to explain. We are, especially for divergences, right? We are trained to do blindly decision. Oh, I'm buying here. It's bearish hit. It's bullish hidden. But stop for a second. Ask yourself the same questions I just asked you, and you would figure out that this is not the right thing to do. Even if that makes the bounce, it makes the rally, it's not the right thing to do. Okay, guys? So maybe that's annoying to talk about these things, and we all expect to discuss only about charts and setups, but hey, we are here for the real trading. And real trading, as I just said, it's not about charting only. Charting is the easiest part. Easiest part. And I guarantee you, inside the club, there are geniuses that know the charts million times better than myself, and still struggling to do the final decisions when it comes to trading. And you know what? Let me tell you the little story here, and I continue, I promise. On the tests for the hedge fund house, I was the only guy without any degree. I never finished my university, and I'm not really. I used to be shy about it, but never ever anymore. The only thing I was good with is the numbers tricks. Always, I was good with the numbers, and among all the 300 guys that came for the tests there, I was the only one that was not trained, not finished degrees, and without experience. But I did know to deal with the numbers, to filter the numbers, to filter the same condition that everyone, boom, says, wow, 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 wow. I always knew to hold myself saying, hold on, is it really wow? And in the test, it was me and 2 more guys that immediately passed. And when I was there in the interview after that, after the exam, he told me, like, how did you do that? I mean, you know who you compete, right? You know that you compete here, amazing brains, and I don't know what really to answer in that conditions. So I told him, look, I just go against the mass thought, right? The the crowd, going against the crowd. So whatever it comes as a normal condition, whatever looks like obvious answer, I go against it, because on most of the times it will, whatever the crowd thinks on most of the times would be or too early or completely wrong, and when you know to recognize these situations, you basically give yourself the edge. And he asked me, did you use the charts, because it was chart and numbers to find a deviation? Told him no. He said, why not? And told him, because you, first of all, you never told me charts are part of the game, which is true. Second is because when you're dealing with the numbers and you need to find deviations, why do you care what's happening on the chart? It's basically, and he told me it right after that it's there for distractions. It's there to take your focus and cause you to make the mistakes, and that's how they filter the traders, not knowledge. Because on the charting part, I would be failing. There were guys with knowledge that I would just dream about. Seriously, there were guys that were dealing with the chart like, oh my god. I could only dream about it. I still can only dream about it. I have now much more experience, but I still can dream about their knowledge on the charts. The way they perform, the way they do, the way they predict, the way they measure. Wow. But the thing is that they would, the managers, yeah, they wouldn't care about the charts. And he told me after that, I'm very, very amazed, because the charts are there to disturb, to take your focus, to see how you perform and how do you behave when you have these things that disturb you, to make a clear decision. That's why I'm saying that over and over again, guys. Charts is the easiest part. And the reason we all run into charts is the very blind common belief that trading is only about observing the chart. And the reality is, as I said a few times today, when you have this trade that your eye catches or your brain catches, out of the 10, most of the times you should be able to say no, not to take it. Then you get yourself the statistics in your favor. Okay, so remember that. I'm glad the market allowed me to discuss about a specific example today and show you how it looks like in real time, and explain you the logic behind it. Okay, explain the logic behind it. And my biggest tip for everyone is, don't train yourself only on the charts. Don't waste your time on only the support, only the resistance, only the two candles rule, only the divergence, only this. Understand the money flow. That's the real money saver. That's the real game changer. When you understand until where it's best to wait, from where it's best to attack, what is invalidation, and until where you are going. Very, 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 very smart. Timing. Improve your timing. And you improve your timing by these little things we are doing here. The levels. The two candles rules on the bigger time frame. The divergences on ongoing trend, on against going trend. All these little things, they make huge differences. Okay, guys? I'm sorry for the distribution, for the destruction here. Let's continue. Okay, so thank you for the good words, guys, and let's continue. So we are on the pounds. Pound yen was our last one. We are bearish. Okay, bottom line. That's the bottom line. We are looking to sell rallies. As simple as that. Our invalidation, yes, it's far away, but it's right here. Our target's 146, and maybe even lower. Okay. So let's continue, guys. The next one is our pound versus the Aussie. Pound Aussie is one of the trickiest. Why? According to the monthly chart, our target, 50% of this amazing cycle was reached. So we don't have nothing from the bigger view, the huge view, right? The weekly chart, we had a double cycle down, right? Which almost reached, but the way it looks, we can still see that pushing a bit, right? Especially if this is a triple descending, then we can still see that going here. So the weekly chart doesn't really help us to make a clear decision. Yes, we have a triple cycle here. Yes, we have a bearish divergence. So yes, we prefer the sells. But according to the levels, we can still see that high. So the weekly is not obvious. Let's try to see what do we have from the daily. From the daily, we had a triple cycle on this part with a false break, with a divergence. So the daily is a bit clearer than for sure than the monthly, and also than the weekly, right? So on a daily chart, we can say, oh, so we are into sells. On the 4-hour chart, we had false break, which makes it what, guys? Who can tell me? Exactly. That makes it a range. A range, well, it's not a potential because now it's 2 false breaks, it's official. Will that hold or not for longer view? Of course, only time will tell us, but we traded facts as range. So the daily cycle is a triple, the 4 hours ending cycle range, which could be as a possible developing after that, right? As a corrective to the daily, and the developing in the beginning as the first could be doing this. So for us, on the short-term trading, we are bearish as long as we are below this high. That's our real invalidation. Sorry, no, it's not for short term. It's the direction. We have the reasons for that from the daily and the 4-hour combined. 2 false breaks, also the convergence in play and the range developing. This is our invalidation. So the pound Aussie bearish as long as we are below this high. Okay. Pound Canadian. Now pound Canadian, this is our weekly chart, cycle. 38 is in play. We are on top of the range, false break, false break. We are on top of the weekly range, right on the 38 too. On a daily cycle, when we combine it with our weekly view, what do we figure out? That, oh, this is a triple cycle. 1, 2, 3. The divergence is rocking there, right? It looks simply amazing, right? So we should be asking ourselves, do we have the signs for sell already? How do we get the signs of sell, false breaks, and convergence? Do we have any convergence here, guys? Well, we do have false breaks. Do we have lower lows for convergence? Do we have the lower lows for the convergence? The answer is no, we don't. For the pound versus the Canadian, there is no yet bearish confirmation. Once it is confirmed, we have the sells. As long as it's not, pound Canadian is still bullish. Okay, timing, remember that timing part? That's timing. So we do want to see the lower lows. We do want to confirm this convergence. Once we do, we are looking sell the rallies. Okay. So what do we do in the pound Canadian? Both directions are untradeable. The current momentum is still bullish. At the moment it hits the convergence, the pound Canadian turns to be bearish. And pound Kiwi. Pound Kiwi is, for the long term, one of my favorites. Let me explain. We got a triple cycle on the monthly chart, which means for the long term we are only after buys, 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 buys. On the weekly chart we had a double cycle up, which means we want now to see corrections down in terms of double cycle, or who can help me here, or a range. Thank you very much. Exactly. So that's the two ways. Because why? Because the correction is in two waves or a range always. That's the corrective cycles. Okay. So in that, by saying that, we know that on a daily chart we need to see two waves down or a range. In that case, what do we have, guys? What's that? False break on the top, false break on the bottom, which makes it to be a range. Thank you very much. If it's a range, we are looking to buy the bottoms, right? We are looking to buy these areas. Now we were here already, right, around the bottom of the range, and let's see if we have the conditions there for the buy. 4-hour chart, false break, higher highs. Yowza. That's my favorite word now of my son. Yowza, when he sees something that looks really interesting. 1-hour chart, right? Same 4-hour chart, which means that we need two waves retraces or bullish hidden divergence, because we are on ongoing weekly and the daily. If we have the bullish hidden divergence here, we have ourselves the buys. And then we drop to the lower time frame, which is the 1-hour chart, and we are looking to buy the break of the trend lines. Okay, currently this is the trend line. It might go and develop into more beautiful and inviting trend line. We are bullish in our view as long as this low holds. Why? Why not be as long as this low holds? Easy. The answer is easy. We need clear validations and invalidations. If we break below that, remember the bigger view, we still can get two waves down or a range. If it's a range, we can still revisit the 61.8 of the two cycles, and it still will be in the range. If it's two waves down, then we are going to here, and then it's the two waves correction back to the trend line and a fly. And that's why we have to be so specific here. So specific. So we are looking for the buys as long as this top hold. The way we are looking to do that, as I said, two waves down on the 4-hour or the 1-hour chart and trend line breakout. Then, and only then, we have the buy confirmation. As long as we don't have it, it's a buy potential, not confirmation. We don't trade expectations, we trade facts. Do we have a fact to trade currently? No, we don't. Okay, that's why we have to be very specific here and don't press the button too fast. Okay, guys, if we break below this low, which means the short-term bullish view invalidated, and then we can go to the bigger correction. By breaking that, basically it opens the doors for further sells. Okay, so do not rush to buy. We need a bullish hidden divergence there, or a beautiful trend line on the 1-hour chart, or combination between these two, and then only then we can go and start looking for the buys with the breakouts. Is that clear, guys? It's very important to remember that because such conditions like a convergence and a false break could be simply eye catchers, right? It could catch our eyes and say, wow, this is an amazing setup, and let's just attack, no stop loss, nothing, it will be just good. But hey, remember what I told you before, don't marry your dream, don't marry your idea, trade facts instead. The fact is that if we break here, we can see the levels lower according to the same cycles. According to the same cycles. So trade here without any logical plan or any clear risk-reward plan is basically a wrong idea. Okay, that's for the pound kiwi, and we are done with all the pounds. Any questions about any of them? Joseph, yeah, I see the pound yen as we discussed. All right, any questions, guys, about any of the pounds? Yes, no, maybe? Great. So let's move on. Pacifics, Australian dollar, bearish. The reason we are bearish there on the short term, because for the long term, I still think that this double cycle is in play. So I would still want to see it going and taking it higher, right? But on the short term, the weekly chart did provide triple cycle, did provide a false break, did provide a bearish divergence. So we can't argue the fact. The daily cycle was this, the last part. The 4-hour chart was this. Basically, it's not the 4-hour, it's more like 1 hour ride on the last daily leg. So that's all basically. From this moment, we got this cycle down, double cycle up, and that's where the bearish plan is in play. And we are bearish. This is the invalidation. Wow, I'm writing ugly. As you see, I told you, there are so many guys doing charting and writing better than me. Aussie dollar has a bearish direction, short term, and the targets according to the weekly. Sorry, that's the daily. According to the 07750 and the bigger weekly view, we are to 076 zone down to 075 zone. That's according to these cycles. Now, what we do is we put the way the cycle is developing, we put the Fibonacci extension to find magnets, right? That's the way it develops. And here we are, that's our magnetical targets. Okay, the higher time frame corrections and the extensions on the go. Okay, so bearish it is for us. Okay, delete all selected. Great. Aussie franc. We are looking for another low to start looking for the buys. So the pair is short-term sells. The idea is to go long on the long term. This triple, we want this. Okay. Oh, Joseph, that's why we have the report. That's why we have the report. Everything is right here. And after that, it's easier for you to follow what's easier to trade. Basically, no. You never can catch all of them. Of course not. Go with the ones that have yourself the setups. Basically, ongoing trends, in other words, right? When you have few cycles, combinations, and direction. That's very easy. So Aussie franc, we want that move down. We got the move down, right to 100. The only problem with that, we don't have any bullish divergence here. And that's why we would expect that to try and make a push down for us and go for buy. So Aussie franc short term still remains bearish. We also have no higher highs yet, nowhere. So the Aussie franc still bearish on the short term. For the long term, once we have the low, we will be looking for the buys, definitely. Aussie yen, unchanged. We are bearish. The idea is very simple. Very simple. That was the cycle on the Aussie yen. That was a double cycle correction. Basically, as long as this top holds, we expect a continuation. Very, very simple based on the cycle's rules. Daily cycle, we are in ongoing channel, right? Which means, yes, most likely we are coming to this zone where we would see pullbacks here or here, back to inside, and then we will be looking for a hidden divergence to go and sell. Yes, okay, but the long-term direction doesn't change, just confirms. On the 4-hour chart, we do have false break. We do have a false break. We want to see pullbacks. We never have trend line breakouts. We never have higher highs. So, generally, we never have confirmations for the buys yet. Okay, the confirmations for the buys could come as 3 waves up, 2 waves down, buys. Okay, that's where we can start looking for the short-term retraces. And as I showed you before, all this area is an acceptable zone for clearances, and rallies. Don't rush into buys. Do you see, once again, guys, why it's so important? Don't rush into buys. It doesn't make sense when you are against the higher time frames. Roberto, for your question, I'm not sure which one you mean, but we don't have. Oh, this one you mean? Well, you don't have 2 candles rule in play here, so it's one move. You can't compare lows because you don't have. Okay, clear? Great. Okay. That's why we don't have the divergence validated. Basically, yes. If there will be 2 candles, that's a divergence, of course. We here, if you remember, 2 weeks ago, we accepted. Sorry, not this. We accepted the pullbacks for buys there due to the special cycles, right? So we accepted these 2 waves up. But once it's completed, game is over. No reasons for the short-term buys anymore, right? So it's very, very. That's what we call follow the charts. Olena, yeah, sure. You can have my template, the MACD. It's everything available for you in the download section in the members area. Okay, inside the members area, download, and you can find everything there. Okay, same template, same MACD. All right, great, cool. So Aussie yen, long term, we are looking for sells. Short term, we will accept rallies definitely because we want to go for long term sells, so we accept the short term rallies. But the plan remains the same. Aussie Kiwi, guys. Aussie Kiwi. I'll make it simple. This is one of my favorites for the long term due to the special cycle and range. Oh, I'm dreaming about these buys. Which means we need 2 waves down on the weekly or the daily. The way it develops on the weekly, we don't have it. On the daily, yes, we do. And we are sitting and hitting the 100%. The bullish divergence starts to pop up. Here we are, bullish divergence. Start looking for the buys. 4-hour chart, we had false breaks. We had alternative trend line false break. We had regular divergence turn to be fake convergence. And it looks like we have the convergence, right? But the answer is no, we don't. It's exactly the same level. For us, because of the monthly and the weekly cycles and the daily cycles levels, because all of the directions represent the same, this pair is into buys. This is the immediate invalidation, which means break below that, and we are entering the neutral mode. We will be waiting for the next signs for buys if we break below that. And as long as we don't, every 2 waves down and a breakout is a buy opportunity or bullish hidden divergence. Why? Because we are on ongoing monthly, weekly, daily expected trend. So Aussie Kiwi bullish as long as we are above this bottom. Break below that invalidates it and makes it neutral. Why? Because in that case we might see that doing one of the two things. One, another false break and only then a rally, or who knows, maybe again a visit of the weekly range down. At this moment I'm very doubtful, but we trade facts, not expectations. And Aussie versus the Canadian, for me, this is unreadable. I don't see anything here. Weekly, we are in a range, right on the middle of it. Daily, we are in a range, right of nowhere. We also had a triple double up. Here we have double up and target reached. No clue. Aussie CAD, I see nothing. For me, it's untradeable. Okay, and I saw for some reason many traders are trying to catch that, and why? This is really out of my understanding. Why? To waste your time on something that has nothing but nonsense. No idea, guys. Anyway, my view, stay away. New Zealandian, bearish as long as we are below this top. That was the view here. Previous week, we were following a possible breakout of the double cycle. Instead of that, it moved lower again, which holds the double top from the daily chart, basically, holds the latest breakout. From my point of view, on the short term, as long as this top holds, we are bearish. And this is the cycle, basically, that we had on the 4-hour chart. Developed into double cycle here, so it can easily play as a range or deeper correction. So bearish with this invalidation. Okay, New Zealandian yen was and remains bearish because of the weekly range and the weekly triangle inside. So we still, why is that moving here? We still expect it to reach the bottom or even lower than that. And the idea there remains bearish for the Aussie yen. Roberto, thank you very much. Enjoy. Have a good one. So sell rallies on the 4-hour chart. We are into triple. So yes, rallies are acceptable. Short-term corrections for the long-term bearish. Unchanged on the Kiwi yen from the previous week. Okay, New Zealandian franc and New Zealandian New Zealand franc among all the New Zealanders is the only one that I have no view, so this one is neutral for me. New Zealandian Canadian is for sells. Why? Same idea like the weekly, like the Euro CAD we've had. Bearish hidden divergence, and the daily chart engulfing and a triple cycle. 1, 2, 3. Bearish divergence that turned to be a fake convergence. So we are looking to sell rallies. How are we selling the rallies there? 2 waves. So what we need to see is 1, 2 breakout, or bearish hidden divergence to confirm the top. Bearish with this level as invalidation. Breaking above that could open the doors for the trendline visit on 094, 095. Very simple. Okay? So that's for the Kiwi CAD. Bearish, this is the invalidation. We have beautiful zones, and on the 1 hour chart also starts to form it potentially. Don't rush. Wait for the 4 hour chart, give you the confirmation. Don't rush. It can easily start to make here some clearances. Patience, so critical on that setups. Majors, dollar pairs, dollar yen. According to the weekly cycle, we are still riding the lower highs, lower lows. No divergence to prevent that, so we expect bearish continuation, maybe for the second wave developing. According to the daily, we had this cycle. Okay, so we want to see the corrections and sells. So dollar yen, bearish for the long term. Short term corrections up are acceptable and could be easily in play. So far it follows exactly what we wanted to see from the previous week. That was the special cycle. There's the double, it's developing. So as I said, corrections up are acceptable. If we get them, we are looking for the further sells. Dollar franc, exactly the same. Okay, rallies according to this cycle and a bullish divergence. We want to see the 1, 2 back to 095 zone, 095, maybe 096 according to the Fibonacci retraces corrections levels. From there, we are after sells. Basically, what we need to see is 2 waves, right? And then we are after sells. That's what we will want to go with. Very, very simple. Dollar Canadian. Both. Reason for both. According to the weekly cycle, we can see the 128, 131. Here we are. We have nothing to prevent the current bullish momentum. The only thing that was there was the 4 hour chart divergence that we were talking on the previous week. So we accepted the short-term retraces. After that, a bullish hidden divergence came in play. So dollar Canadian, nothing obvious, completely tradable in both directions, but only for the short term, and the current momentum still remains bullish for this pair. And two more pairs left on our list. That's CAD versus the yen, which remains bearish for us according to the weekly cycle, exactly like the Aussie yen. Triple, double, as long as this top holds, we're looking to sell the rallies. So CAD yen is bearish for us according to the weekly. According to daily, we have no divergence yet, so bearish it is there as well. Every 2 waves retraces, 4 hour, 1 hour chart, and still a sell for us. CAD yen is bearish. CAD franc, bullish. Cat Frank reached the 161.8 extension right here. Beautiful divergence right from the action zone and the low, engulfing 4-hour chart false breaks and alternative trendline false break, and we have here all the reasons to start looking for the possible buys. We don't have yet higher highs, but we do have all that weekly and daily levels. So as long as this low holds, we can start looking for the buys. The best way to do that, 2 waves retrace, 4-hour or 1-hour chart, or bullish hidden divergence. Currently we have none, so we're waiting for 2 waves retrace, breakout, and we can talk about the buys. Alright? That's pair the Canadian versus the franc. The invalidation, as I said before, is the low, the previous low. Breaking below that invalidates the current immediate buy setup. We also have, by the way, a bullish hidden divergence developing here on the weekly chart, and we are right on the trend line here. I like less the weekly chart to rely on for one reason, because we're stuck in one candle here. So whatever happens here isn't really important. Just visual, nothing really to make decisions from. So we're all on the daily and the 4-hour chart combos there. That's all for the Forex pairs, guys. Congratulations and thank you for your patience. Let's continue with the commodities. Silver and gold. We are looking for the buys there for the long term. By ideal, we should see one more low created by the silver, then we mark the trend line, and by breakout of that we start looking for the buys. I marked you here the cycles that we have, the big cycle and the short cycle. That's our magnet zones. So we want to see that going lower. Create a divergence. And then we start looking for the retraces and the buys. I don't think it's worth to deal with sells at this stage. From my point of view, it's too risky, I would say. Same with the gold. I suspect and expect that to be able to do another push down, maybe down to here to find the magnet zones, 1 or 2, but I myself prefer to go for long-term longs here. So gold and silver, both for the long terms we are after buys. Short-term retraces down are acceptable, but my view that it's safer to trade the long-term buys if we do have the lows. That's of course my view. Oil, bearish as long as below this top. Very simple. Reason, weekly double cycle, 1, 2, followed by the bearish divergence. Daily triple cycle, extending right here. And bearish hidden divergence developing. So bearish with this invalidation. Okay, that's for the oil. Natural gas, hold your investment buys with stop loss on entry 260 from the investment report. We have not much there, and that's the only one basically running. The 260 investment, and short term we have nothing to trade there. Indices, DAX is my favorite, and it was explained also on the weekly forecast. Now we have a new high, so we can start looking for the trendline breakouts and look for sells right after that. So we want to see the breakout and then sell the retraces. Okay, so DAX is bearish for us with the break of the trendline, of course. Dow Jones, same story, basically. We now cleaned the level the divergence is in play in terms of the moving averages. That's the trend line we have. It has to be broken. Once it does, we have the okay to go. Nasdaq is the only one I wouldn't deal with that, to be honest. Really nothing clear, could easily clear here new highs, wouldn't deal with that. So DAX is number 1 for me. The UK is number 2 for me, and then we have the Dow Jones. So this is the second one, of course. By ideal, we should clear the 61.8, a bit higher, but that's the trend line. Once we break, we can start looking for retraces and sell. It's warming up, it's building up, it requires the attention, so give it the attention it requires, guys. And the cryptos, well, our view was and remains bullish. We wanted to basically, I'll show the Ripple and a few more, but it remains for all the ones that we have on the list. As long as this top holds, we are after buys, which means 2 waves retraces down, we can start looking for the buys. 1, 2, dropping lower to the 1 hour chart, looking always for the latest trend lines. The last trend line that we've had with the Ripple was this one. Actually, we had this one, but the angle is too steep from my point of view. Right from this moment, we had ourselves this trend line. As long as, Olena, thank you very much, have a good one. As long as we are above the daily bottoms, 2 waves retraces down on the 4 hour or the 1 hour chart are the ones that we should follow. Break above the trend lines, we have the buys. And that's same for everyone, for everything. That's same for the Ethereum. As long as it is above this low, we are going to the 4 hour and the 1 hour chart. Last trend lines are in the buys. That was the last one. Since the rally, that was the last one. Okay, and that's same for everyone. For Bitcoin, as long as this low holds, we are bullish. And we were talking about this also on the live trading room, on the live, weekly video. Wow, now I start to confuse the words. That was the previous week trend line and the rally it provided. Now this is the last one we got and the rally it provides. As long as the daily low holds, every 2 waves down breakouts, that's our chances to buy. Okay, guys? And again, I showed a few, but it's same for everything. The Monero, the IOTA, which I love. I love this one, really. It's one of my favorites for the long term. The ETP, which I love. Look at this one. Look at today's breakout. Okay, as long as this low holds, 2 waves, we are for buys, and that's today's one. Okay, they all the same, Trin, all the same. I showed few, they all are the same exactly. That's the lows. As long as we are above the lows, we are for 2 waves retraces, breakout, buys. 2 waves retraces, breakouts, buys. All of them. Okay, really, it's because they are in the conditions that they simply follow each other. Due to all the things happening, they are in the conditions that they simply follow each other. Zcash, Monero, Neo, the Bitcoin's pairs. So this is the last trend line. Break above that, we have the buys. Okay, Ethereum, Bitcoin. Well, for this one, I'll give you a little tip, right? Ethereum, Bitcoin. I would like to see the new low basically raised. This one. and then breakout here, from my point of view, could be one of the most amazing opportunities. If we clean this low in 2 waves, then the trendline breakout could be one of the best opportunities. Ethereum versus the Bitcoin. Just my 2 cents. Okay, so our bullish plan on the cryptos was and remains the same. That's a great question. Is there any fundamental that need to look out for cryptos? There are tons. This one is the one I follow here. News Now. See, okay, can you see that? If you want this site, I can just ping me on Telegram. I will publish that. Basically, it pops up here all the latest news. Too many news for no moves. Basically, on most of the times, it's just noises. I love to read it because this market is new and exciting, and it's kind of just some energy. That's all. To be honest, this market, crypto market, is only for volatility market. That's why the way I define that is very simple. I'm looking basically do it like this. Okay, that's the Scorpios, but the principle is the same principle. Let me show you how I approach to that. I'm looking on the last lows. Well, Scorpio is not seen here, but I'm looking on the last lows on the daily, confirming the lows on the 4-hour, and then I go to the lower time frames, trend lines as I showed before, and I'm taking the breakouts. And that's same for everything. Because basically here what we do is just the idea of momentum. That's the market, momentum, wherever you get the momentum. So once you get yourself the good low you can rely on, then you go lower and you start breaking by the breakouts of the trend lines. That's all. The idea is simple. Catch the momentum, the risk reward would be there. Not every single shot, but the risk reward would be there. Because the way to the upside is theoretically unlimited. The way downside, though, is limited. And that's why this is my approach, and this is how I mainly trade that. Okay? Just shoot, then the risk reward for the statistics always does the job, again, for the longer run. Of course, there are not every shot is a winner, but the 1 to 2 or more risk reward always works on the momentum trading. Or swing, but this is a different story, right? So that's all. That's my approach. That's how I enjoy the crypto world and the crypto changes during the day. Okay. Scorpio. Yeah, Scorpio is very, very helpful. Those who don't have the Scorpio can do it visually. It's not too complicated to define a low or high of the cycle. Not too complicated. We also do that on the live room, so it's a big time saver for you guys. Okay. About Bitcoin going to 8K, it could. So why would we care? I always say we trade facts, right? If it will, we will know what to do with that later. I don't really care. I have my holdings for the long term, which I don't touch, I don't change. But really not care about how low it can go. For me, I showed you what I do. I define the low, I do 2 waves retraces, boom. 2 waves retraces, boom. 2 waves retraces, boom. That's all. Pure statistics. I don't care about anything else, just volumes. The more volumes it will continue to bring, the better it is. The easier it is. That's all. And there are so many instruments. What broker we trade? The broker I use is Hugo's. Yesterday I posted our club link. So our club IB link to the broker. They have the best conditions here. For cryptos, they are unbeatable. For Forex, they have amazing conditions as well, yes. But I use that only for cryptos. If anyone needs private, then private. Okay, guys, I'm not going to cover that here. Just ask me on the private one. That's all, friends. Thank you very much. You are heroes. You survived 2 hours. This is the Monday session, always longest one. There were a few valuable things that I wanted to discuss about today, and I did. So thank you very much for that, for listening. I hope the words we shared and we discussed during the meeting make sense to you. And remember these little things, okay, that we covered today. They are the real changers in trading. Okay, charts too easy, too easy. Thank you very much, guys, for being here. I wish you a wonderful week and a wonderful evening. I'll see you tomorrow. Take care. Bye for now.